I think there could be a little bit more pressure on the downside, but I think oil is a little bit oversold at this stage. Some of the news in the past month or so have been quite negative. Remember, we just got the news on Iran waivers. In the end, the U.S. administration moved from zero tolerance to handing out, in the end, 8 country waivers. And also, we've seen, frankly, U.S. production outperforming. And we've had a massive surge in U.S. supply in the last couple months, which has also added to market bear sentiment. And then, of course, to top that up, I mean, remember, we've seen Russia, Saudi scratching record levels of production in their own right. Again, this makes the kind of the 3 world's largest producers, U.S., Saudi, Russia, all getting to record production levels simultaneously at the same time, like massive increases across the three main countries.
What's the demand outlook like, Francisco?
Well, demand has been a concern. I don't think the demand is nearly as bad at the moment, but certainly I think the G20 meeting in the next couple of weeks is going to really define where demand goes from here. Remember, in the prior segment, you were talking about the U.S. dollar getting stronger. And my biggest concern here is what happens to the U.S.-China trade relationship and how that affects the exchange rate. If we see the Chinese currency coming off very hard against the U.S. dollar over the next couple months because there's no trade deal, and we go into an automatic 25% tariff, maybe more tariffs across the goods that haven't been in scope yet, we could end up with a much weaker currency in China, much stronger dollar, and that may drag the commodity complex lower through the demand channel. So that's my big concern at the moment. Sorry, go ahead.
Go ahead.
Now, one of my biggest concerns as well is really, we've seen Turkey, Argentina, South Africa going into recession, and you pointed out as well, the Fed keeps hiking rates. The data that came out today suggests the Fed is going to keep hiking. This is sucking liquidity out of emerging markets, and you know who consumes more commodities than anyone else? It's the emerging markets, because in the developed world, we don't really need as many commodities. We are much more efficient in the way we consume commodities than they are. They're coming from much lower income levels. So in as much as emerging markets suffer from higher interest rates in the U.S., that could negatively impact the demand side as well.
Francisco, I realize that crude prices have dropped and dropped pretty quickly in the last couple of weeks, but I feel like it wasn't that long ago that everybody was saying, oh, $60 a barrel is essentially the sweet spot right now because producers can make money pulling it out of the ground at this rate, and consumers don't feel that much of a pinch at the pump. Has that changed?
That's not changed. I mean, we've continued to maintain our view. Long-term, oil is a $50 to $70 commodity, any way you look at it. If we drop below 50, we're not making enough of it. If we move above 70, we're probably making way too much. But there can be instances where, for example, the situation with Venezuela, production collapsing, and then more recently the Iran sanctions, where you get a supply-side shock and prices rise. But in the long run, oil still fundamentally a $50 to $70 commodity because you get a lot of shale in that band of prices. And that's what we are getting right now. We moved above the band, and we're getting the supply response right now.
Francisco, what would be a blow in terms of GDP growth next year for oil prices from here? What sort of priced in? Is it something bullish or very easily achievable?
Well, our economists are still looking at global GDP growth rates above trend, so somewhere in the range of 3.6, 3.7, 3.8%. But remember, that's for the world economy. The most important thing here is what happens to China, what happens to the rest of the emerging markets. If Chinese GDP growth drops meaningfully below 6%, it could be an issue for oil. So I am most worried, frankly, about a very sharp deceleration in Chinese growth. That's my biggest concern. What happens if the trade tensions, higher oil prices, all this turmoil end up coupled with higher interest rates negatively impacting China and preventing the government there from responding as it has in the past to those growth pressures? That's the big issue. But beyond that, I mean, demand is only slowing down moderately. So.